Hey everyone, Mortgage Tree Dave here with your weekly update. Thanks for tuning in. Last week, we looked at how the new mortgage underwriting guidelines impact borrowing power, and in specific, we looked at what it was like if you had an existing mortgage and wanted to refinance or borrow funds to help with that home renovation. So, today, as promised, we're going to look at the new rules and how they will affect someone looking to purchase with 20% or more down for that new house. Last week, we said that previously, a high ratio mortgage candidate would have to qualify using a benchmark qualifying rate, and a conventional client would not. But now, borrowers with a down payment of 20% or more will now have to face a stress test as well. And that was the case since January of 2017 for the high ratio clients who would require the mortgage insurance anyways. So here we go with the examples. Example 1 is going to be based on assuming that there is a rate that is more than 2% below the benchmark. And today, April 11th, 2018, that benchmark rate is at 5.14%. So, in order for that, we're going to pretend that you're going to be getting a 2.99% interest on a $500,000 home. Your 20% down payment is $100,000, the balance to finance is $400,000, and your monthly payment roughly is going to be $1,891. What you need to be able to afford in 2017 was $1,891 worth of payments, right? According to a mathematical calculation, you would need to have $71,950 of household income, assuming there's no other debts per month. But now, in 2018, it looks like this for the same scenario. Same value of house, same value down payment, which means the mortgage value is going to be the same. Instead of needing to be able to qualify at the $1,891 per month, you have to prove that you can qualify using a new payment amount of $2,358 per month. This is because you're now having to prove that you can meet the benchmark qualifying rate, and it's either the posted rate you're applying for or 2% above the benchmark. 2.99% that we based it on plus 2% is 4.99%, which is lower than the benchmark. This means that the calculations that are going to be used are based on making sure you can pay at the 5.14%. Now, how much more income does this household have to produce to be able to qualify for that? How about $86,713? Again, we're going to assume there's no other household debt to consider. That means you have to earn 17% more income to qualify for the same house after January 1st, 2018. Here's example number 2. We're going to base it on assuming that the rate is more than 2% above the benchmark, which, same number, currently at 5.14%. So in order for that, we're going to pretend that you're going to be getting a 3.49% interest, and we're going to base our calculations on that for your $500,000 home. All your calculations are the same for the down payment and the balance to finance, but now your monthly payment is roughly $1,995 a month. What you need to be able to afford in 2017 was $1,995 payments. According to the same mathematical calculation, you'd have to have a household income of $75,236. Again, assuming there's no other debts. Now, in 2018, it looks like this for the same scenario. The same value of house, same value down payment, which means the same mortgage value. But now instead of needing to be able to qualify at the $1,995 per month, you have to prove that you can qualify using a new payment amount of $2,439. This is because you're now having to prove you can meet the benchmark qualifying rate, and the 3.49 plus 2% means calculations that are going to be used ensure you can make your payments of 5.49%, which is actually higher than the benchmark of 5.14. Now, what does it take for this income household to be able to do to qualify for that? How about $89,265? Again, disclaimer, we're going to assume there's no other debts we're considering for it. That means you have to earn nearly 16% more income to qualify for the same house after January 1st, 2018. Does that make sense to everyone? I know it's a lot to cover in such a short amount of time, and I'm sure as usual there's going to be lots of great questions. Awesome. But as always, please be sure to leave your questions or comments below and I'll get back to you on them. Be sure to follow me on Facebook, where you can find me as @MortgageTreeDave or Dave Walkner Professional Mortgage Advisor, or you can find me on my website. And remember, if you like this video, please click subscribe. So until next week, stay safe, stay warm, because it's still cold out, and save money. Thanks everyone.